Hi everyone. Welcome to this morning's live stream. It's going to be a very slightly shorter session that we've done up until now because we've had a lot of questions about volatility and just wanting to know a little bit more about it, why it's so important to understand, and the impact that it has not just on the chart that you may be looking at, but also the impact that it has on us as traders from a psychological and an emotional perspective. So before we start, let me just share my screen very quickly and let's have a look. Here we are. Right. I've actually got the pound yen up to this morning. Because there's been a really nice move in the pair. They've broken out of a consolidation phase, as we can see here, top left on the daily chart. And the sessions thus far, we have been looking at consolidation phases in all the different time frames, particularly on maybe the slower time frames, the hour. We haven't really looked at the daily, but particularly the hour, and see how that can impact what is going on the faster time frames, how we can identify consolidation phases. You can eyeball them, you can put manual lines on yourself, or as we discussed in a previous session, using our quantum trading pivots indicator. And there have been some, we had a really nice example of that on cable. I know we're going to be looking at cable later on in this short session, but volatility. Go back to volatility, and in fact, it's a great excuse to go back to the Dixie chart that we actually started with on this series of live streams. And if I just make that a little bit bigger so you can see. And for those of you who haven't been coming along regularly, I just want to explain what we have on this chart. This blue line here is actually a level that I have taken from the monthly chart. And the reason I've taken it from the monthly chart, in fact, if you look at the monthly chart, it's probably best if you can see it quickly. There we are. Here we are. Yes, if we go back to March 2022, you see that it was the point around this area which led to the start of a very strong rally for the US dollar. Now, the key thing, obviously, it did actually break that level there back in June. But from a VPA perspective, the significance of this level is given is even stronger if we look at the relationship between the price action and the volume. What we see heavily falling prices. We can see here, we can see here, but look at the volume. And that's the first thing that actually caught my eye. It's always the VPA that comes first. And then I looked at that and said, well, that's interesting. Why has it come, why is it coming down? Why is it doing this from a VPA perspective? Is there any particular reason for it? And then I just looked over to the left-hand side and I say, well, in this zone, in this area, we had the start of a strong rally for the Dixie. And if we go back to the daily chart, which is why I put it on my chart, and you can see it overshot it slightly. Levels that we draw on either manually or are created for us by specialist indicators, be it Fibonacci, be it the ones that we have from quantum trading. You have to give them a certain amount of leeway. They're not pinpoint. You can't sort of say, right, absolutely down to that pip. You've got to give them a little bit of flexibility, and also just be aware of the level. As you see here, it actually broke through. There was a fair amount of volume coming in, but you can see the spreads coming down, and then they narrow on this one. We have a pivot. We've got a small hammer candle with a lot of volume underneath it. The same volume on that tiny candle as there was on this one and the previous one and the previous one. So you can see, obviously, they're stopping shopping volume coming in. The price doesn't want to fall any further. And so it starts the slow climb higher back to this 90, the key 97, 97 levels, as I pointed out on the monthly chart. Now, when you have such an important level, and a level can be even something like a 200 MA, it becomes a kind of psychological level because the market is always talking about the 200 MA. What you want to see a break with good volume. And what sometimes happens is you then get a volatility. You get you get that additional burst of energy, of activity, of participation. And in fact, we had that on Wednesday. We can see here the daily chart came in. The volume was much higher. You need a lot of volume. You need extra volume to get over these significant levels. And in fact, it triggered the volatility candle. Now, there's two aspects to what we call a volatility candle. Some people call a master candle. I've even heard it described as a manipulation candle. And if you think about it, or psychological candle, because the reason is this: as traders, we can sit here for however long we sit here waiting for our preferred setup. We're waiting for the market to react maybe to a piece of news. We're just waiting. We spend an awful lot of time waiting. And if we think about it, markets spend maybe up to 80% of their time in consolidation. And if it's markets are moving sideways, we have to wait that little bit more, if obviously waiting for a trend. And so what happens is market makers know this. And they know we get bored, we get fed up. Well, nothing's happening. Oh, I'm getting bored. I'm getting fed up. And then suddenly you have a burst of activity, of momentum. Volatility comes in. Volatility is non-directional, except in one case, which I'll say later. And we suddenly see price moving, and we get terribly excited, and the dopamine starts going in our, it's triggered in our brain. And what it does, it triggers the one emotion that we really, really have to keep under control and have to manage, and that is the fear of missing out. Because when we see things moving strongly and moving quickly, we want to take advantage of it. Who wouldn't? But you have to, first of all, understand and determine, well, am I being manipulated into jumping on this move because the market makers, the insiders, want to push the price to a particular level, because once it gets to that level, they're going to reverse it. I mean, we don't know. All we know is volatility has come in. The price is moving faster, particularly to the downside. In the last session, David showed you we have an indicator called the tick speedometer, which actually measures the number of ticks, the number of the times the price changes, and you can see it in action as more participation comes in. That the bids and asks, they move like lightning. When the market is quiet, nothing. It just plods along, and it making us even more frustrated. So with the trigger of the volatility on the daily chart, there's two aspects of this. There is, as I said, the psychological aspect. It is over this level, but we still have to approach it with a degree of caution. Now, what normally happens when this is triggered, especially particularly more so on the slow time frames, the price will retreat to within the spread of the candle, and we can expect then another a period of consolidation. And in fact, that is what we've had. So we had the volatility, a lot of volume went in there, and we have back into the spread of the candle. And now the volatility candle itself, the manipulation candle, the high and the low of this candle. And if we put a line across here, you can see you've got the resistance all the way back here to about 90, well, it's about 98, almost 99, as it were. So you've got that as resistance now, and your support is now very much the 97. So if you like, once it's got over this level, we are now within in this congestion, in a sideways range on the daily chart. And if you want to put additional levels to remind you of that on the faster time frames, you could put something like, as I use this little drawing tool over here, I use Oza Ray. I have it in pink color, so I put that there. So I can see that there, and I've got it with the blue, or if I want, I could move it down there. But that tells me where we are moving forward. Certainly for today, we'll see what happens after the weekend. And really, one of the biggest pieces of news, we've had a lot of economic data. I don't think there's much today, but the retail sales came in much better than expected. That gave the market a lift. But the kind of background news to all this is what is going to happen to Jerome Powell, and whether he is going to resign, whether he's going to, as I said, be fired. I don't think that is possible, from what I understand of how the Federal Reserve is set up. But that's the kind of main news, and I think it's always interesting. Well, certainly when David and I were in corporate life, if you want to get rid of someone, and you can't just say you're fired. This is unlike the reality shows, you're useless, get out. You usually find an excuse from either process hasn't been followed, or there's been some dealings that are not, a bit, what we say, a bit moody. They're okay. And with the Fed, the interesting thing is their refurbishment of their building has, I think the costs have come in at 2.6 billion. I mean, good grief, what have they got? Diamond studded taps in the bathroom or something. I'm, I'm just I'm just astounded, of what the refurbished. And maybe they'll get him on something, not running the proper budget. Who knows? So that's the background story. Right, pound GM very quickly. As I said, this is a quick session because I wanted to look a little bit more, talk a little bit more about volatility and the reaction that it is designed to trigger in us, and as I said, that emotion is FOMO. Right, pound yen. Again, we see here this has been moving within this in range. It's quite a decent range, 98.20, about 100 pips. It says up, down, up, and within those individual candles, obviously on the faster time frames, there would have been opportunities for scalping and short-term trades, but now it's looked like it has broken higher. If it has, that will now give us a really nice platform of support. And why did I put these lines in? Well, I just show you. I only have to scrunch up the chart, and you can see. So this is how I do it from here to here. And what's interesting is on previous occasions, that came away, tested it. I mean, with support and resistance, you always have to accept that there's always the possibility, the likelihood of a retest. And then what happens in the retesting and how the price action plays out, you then get patterns. So you could say, well, that was a really nice double top there. It broke through, it tested it again, and then it falls. So you do, with support and resistance and what happens with the price action at these levels, you then do bring in the other element of volume price analysis, which is candles and candle patterns. And what you then also take it on one step further is that certain instruments, certain markets respond to certain patterns. I mean, there is a hierarchy of success, if you like, the probability of success in patterns. Some are stronger, some have been shown to develop and come to fruition, if you like, more than others. I mean, the double top is one, the double bottom, the triple top. They are just stronger. Others not so much. So there we are with the pound yen. If we look at the as I said, at the faster time frames here, we can see this is from, as I said, 8 o'clock is our time here. Nor usually, I'm a bit disappointed actually. Usually we get lots of volatility around the London Open. We haven't today, so markets are quite quiet, quite complacent. No volatility is complacency. That's just as dangerous as a market that is completely out of control. Right.
Thanks, darling. And we're going to go straight across onto the chart. So I'm just going to share my screen, which is this one. I hope that's the right one. Application windows, or screen 2. I think it's the same. Should, yep, that come up. Yeah, MNQ. Okay. Just before we jump on the charts, let me just, because we often get asked this, I'll very quickly just point you in the directions for various things. This is Anna's site, annacooling.com, and you'll find all the details on live streams. We've got various videos down here. But what I wanted to highlight here is really on the books. We've now got full color paperbacks available, which I know a lot of people have been asking for over the years. So they are available now. So it's not just black and white. We've got the full color paperback. And also, I think it was early in this year, start of the year, Anna recorded the audio version. So you've got the audio version as well of A Complete Guide, plus all the other books. They're all up on Amazon, where you can find them, and in various other places. We're also on Google Play and on Apple's platform as well. This is where you'll find all the indicators over at quantumtrading.com for all the various platforms. That's MetaTrader 4.5, NinjaTrader, TradingView, and TradeStation. I'm going to be on TradingView today because it's just a wonderful platform. It's browser-based, so you can use it on any device, and you can use it on your mobile device as well, iOS as well. So it's fantastic. Just a great platform. And before I forget, if you do invest in the full package of indicators with us, you get all the indicators that we develop in the future for free. They become complementary to you. It's something we've always done. We've been going now 12 or 13 years, and it's something we've always offered to every single customer. If you buy the full package, doesn't matter which platform it's for, any indicators we've developed in the future, you will get those bolted into your account for free. Finally, just the quantum trading education site. These sessions and also videos that we put up on Anna's X feed, where she has a lot of followers on Facebook, they will introduce you to the principles of volume price analysis through the books, through those videos. But if you want to take a deep dive into VPA, then you can do so through the education programs, which are over at quantumtradingeducation.com. We have a program for stocks, and we have a program for Forex. And you, in addition to that, you get some of the indicators as well bundled into that as well. So that's where to find everything. Okay, let's hop back over to this tab. This is, I'm just on the MNQ because just want to give you an idea of sentiment, primarily because if we pop this up full size, there we go. Yesterday was an important day. Why was it important? Because we broke out of a congestion phase, which had been going on for well over a week, almost 2 weeks. We're in up, down, around this sort of level, around just below, just above 23,000. And yesterday was a very positive day, helped by that news that Anna referenced. So we had a nice upspread candle, good volume under that. So volume and price are in agreement, very straightforward. And the index is now looking to push higher. So we're very much in risk on territory at the moment in terms of broad sentiment across the market. Now, let me just pop this 2-minute chart up, because what I want to follow on is really what Anna was talking about, was the volatility. We have volatility, which is a key component in options. I'm not going to go down there. But the volatility that we're looking at here is on the price chart. It is around the price. And as Anna said, it is always associated with market maker participation, or in some cases, as we have here, a lack of participation. In other words, a trap move. And the reason it is so powerful is because it triggers that fear of missing out, FOMO. So when we see the price shoot up in this way, very quickly, we see it breaking out from a mini congestion phase. Bear in mind, this is a 2-minute chart. A ton of volume comes in, the market makers are participating, they force the price up very, very fast. You can imagine all the traders jumping in on that, thinking, oh, we're going to go to the moon, let's make some quick bucks. What happens? One of two things. When we get a trigger to the upside, we're either going to go sideways or we are going to reverse. In this occasion, we went into congestion. That is painful to sit through congestion of 10, 12, 14 minutes, however long it is. You don't want to sit through congestion, and you certainly don't want to have a reversal against you. And this is the power that the market makers have. The insiders, they create this volatile reaction in price. It moves very quickly. Your instinct will be to jump on the trade because you don't want to miss out on some easy money. And inevitably, what happens is one of two things with this indicator. You either get congestion or you get a full-blown reversal. And that's what happens. It is an immensely powerful indicator. It's very simple in design. The most important aspect of it is that it triggers in real time. And by that, I mean you don't have to wait for the candle to close. So whether the metric is met after 10 seconds, 50 seconds, a minute, minute and a half, however long, these little triangles will instantly warn you that you've got volatility, which is associated with market makers' participation, and therefore you've got to be careful. If you're not in there, you stay out and you wait for that to clear either the ultimate high or the ultimate low of that indicator, and then you can assume that the volatility from that phase has passed. We then go on to the next session, we get another volatility candle, we go into sideways again, and this is the one where we got the trap move. Because if you look at the volume associated with this candle, it's a fraction of what was going on here. And this all goes to the heart of volume price analysis, which is about benchmarking, where we look at candles and we look at their related size and the associated volume. And clearly, if that's a benchmark candle where we had a ton of volume to move it that far, this has gone pretty much the same distance on a fraction of that volume. So what's happened here is this is a classic trap move. The market makers have simply moved the price up. They have not bothered participating because the volume is well below what it should be. And therefore, you can assume that we are seeing a straightforward trap move, which is exactly what happens. And the market comes down. And then we see participation again on this candle, which is a candle to the downside. Now, if we see a trigger to the downside, what do we expect? Congestion or reversal. We've got full-blown congestion, goes on for a while. We get another volatility candle here. What is that telling us? It's to the upside, it's green, so we're going to see a reversal to the downside, or congestion. We get a reversal to the downside. Now we're starting to break out. We're building a base, and we're starting to move away. That is the power of the volatility candle. You'll see it in all time frames. This is on 15 second, which is absurdly fast for most people, but it's one that I use a lot. Exactly the same principle here. Snap to the upside, and down we come. Snap to the downside, congestion, up we go. Now we've got one up here. We've got a candle to the upside. We're coming down. And I won't go into the VPA at the moment, but that is the volatility candle. It's immensely powerful, and it's a ridiculous price, to be perfectly honest, for what it is. It will keep you out of trouble in all time frames, whether you're looking at it from the daily right the way down to, as we've seen there, a 15 second, 30 second, whatever. Let's hop over onto cable, see what we've got going on cable. Let's go down onto, again, just staying with the volatility candles for a moment. We've only got one here. Again, you see the volume associated with it. What do we get? We get congestion. And now we're starting to break out. And this is the key thing. Once we start to break away, either from the upper level or from the lower level, then you can safely assume that the volatility associated with that particular price candle has now been absorbed. It's been dissipated, if you like. It's been absorbed into the general price action. And it's a very simple rule that once we move away from that, we can now say, okay, we are now back into straightforward price action. In other words, genuine price action moving higher and lower. So that was on the 3 minute. Let's just see if we've got any on the 5 minute. No, nothing on the 5 minute. We had this very nice move to the downside and very simple VPA lessons in this move. We get some weakness coming in here. Why? Because the market's trying to rally, it falls back. We come down to this level, we move into a little mini congestion phase. What's happening here? Well, we've got a little rally going on. But does that rally have strength or does it have weakness? And what's clear is it has weakness. Why? For two reasons. The first reason is that the market is trying to rally, it falls back. We come down to this level, we move into a little mini congestion phase. What's happening here? Well, we've got a little rally going on. But does that rally have strength or does it have weakness? Firstly, because the spreads are very narrow. That's the first indication, because if you're going to see a decent rally, then you want to see things like this, where you've got widening spreads, candles with some meaning to them. But here we have narrow spreads. And in addition to that, we've also got falling volume. So the volume's falling here. So what does that tell you? Well, it's an anomaly. Why is it an anomaly? Because for price to move higher, we need to see rising volume with rising price and widening spreads. Equally, in a down move, we want to see widening spreads. And you've got a little mini example here. We break away from this region, the spreads widen. That tells us we have some momentum in the move. We've got some effort going into it. Here we have no effort at all. The effort is falling away. The price has tried to rally. It's going nowhere. And we carry on in our what's called the primary trend in Wyckoff. This is our primary trend. And this is what Wyckoff referred to as a secondary trend. In other words, it's a pullback. Then we get down to the bottom of this phase, and then we get the buying clearly coming in of this candle. We got very high volume, relatively narrow spread in relation to the amount of volume that's come in, because it's all down to benchmarking. So we know there's buying coming in here, and then we start to see this trend develop. Off we go up to the upside, and we get decent candles, all the rest of it, and on we go. So that's a very, very quick little VPA lesson. Now, where are we in terms of the daily? Let's go and have a quick look at the daily. It's been selling off quite strongly, and we've got a little bit of buying came in yesterday. You can see that there. The market fell and we've recovered. So we've got a little bit of buying came in yesterday. So it's not surprising to see we've got a little bounce going on in terms of the daily chart. In addition to that, also looking over to the left of the chart, we've got a potential platform of support, because we've got some decent congestion here going back into April and May. And it also bounced here earlier on in early part of June. So we're now seeing potentially another bounce. And then obviously we were looking at the dollar in that context. Just to run through some of the primary indicators that we use for Forex, this is really where you start. This is your window on the world of Forex, because it gives you an instant view, whatever the time frames. I've got 1 minute, 3 minute, and 5 minute here. It can be any time array you like, and you can have as many or as few of these as you wish. I like to have 3 because it gives me a nice spread of time. And what you're looking at here is what the primary currencies are doing across those time frames. So if we focus here on the 5 minute, what's happening here is the dollar, you can see this red line, it's been descending, it's been weakening constantly. It is now moving into an area where it is very strongly oversold. And up at the top here, you've pretty much got the commodity currencies. You've got the Aussie and you've got the New Zealand up here. So they are pretty much overbought at this stage. So they're very strongly overbought. And this is the key with currencies, with currency markets. They will constantly oscillate from overbought to oversold. It is what we call a market of pure mean reversion. And what we mean by that is that these currencies never go to zero, and they are going to be on a constant journey, going from strongly overbought to strongly oversold and back again. And all you have to do is wait and be patient. And if you want to get into a trade right now, what you'll be looking at potentially, if you want to get in early, which is what I like to do, you'll be looking at something like the Aussie or the New Zealand, probably against the dollar in this time frame. Because at some point, and I can't tell you when that will be, all I can tell you is it will happen at some point this morning, the Aussie will sell off quite strongly and move back to oversold, and the dollar will start to buy and come back up all the way up to overbought. And when that trend is underway, it will be a very strong trend, particularly if the Aussie is falling strongly and the dollar is rising strongly, which is what we want to see all the time. And you can start to see that the initial perhaps representation of that is the Aussie is now starting to roll over on 3. And if it is going to roll over into 5 and develop into a stronger trend, then you will see that on the chart. And what you want to see is the dollar lifting off as it's starting to do on 1 here. You want to see that lift off here on 3 and ultimately move through into 5. This tells you all you need to know about where to go and look at the charts. It's your radar on the world. It'll tell you which currencies are overbought and oversold, which ones to look at on your chart. It'll also tell you which currencies pairs not to bother with. I mean, I wouldn't bother with the New Zealand Swiss because those two lines, the grey and the green, are moving together. There's no trend in there. Equally, the Euro Swiss, nothing. Euro New Zealand, nothing. Whenever you've got currencies which are moving together, like the pound and the dollar, the yellow line and the red line, they're pretty much moving together now. So there'll be congestion at the moment. So it tells you all you need to know. It's a wonderful, wonderful indicator, and you'll find it on the quantum trading side. So very quickly, let's just hop back onto pound dollar. We've got the VRSI indicator here. We've covered that in previous live streams, so I'm not going to go into it here. You'll find it on earlier ones. But it's a great visual indicator. It works with VPA. It's complementary to VPA. And what it is doing, it is assessing the energy in the trend. And it presents this in this very visual way, this very colorful way, bright colors for strong energy, and then weaker colors for diminishing energy, and also the height of the VRSI bars as well. And I always urge you to use it in conjunction with volume, which I've got below here. So I've got the VRSI above, which is our volume relative strength indicator, and I've got traditional VPA below on the same time frames. So that's it. Oh, and Anna's just reminded me that if you go to the quantum trading site, if you want to find out anything about these indicators, go to the appropriate platform. Let's go to TradingView as an example. And if you go to videos, in the video library, you will find a huge number of, for example, if we click on the VRSI here for TradingView, here we are. These are all the videos I've recorded on the indicators. So there's loads of them to explain the principles, how to use the indicators, and you'll find that on every single platform, whether it's a Ninja, TradeStation, MT4, or as here, TradingView. Just click on that, and that's the video library. And there are hundreds of videos here across all the indicators, so you can get a really good understanding of them before you go ahead and buy. So there we go. That's it. We're done. Have a wonderful weekend, and we will be back. Not sure we're going to be back for next week or the week after, because we're taking a break for a little while, but we will be back very soon, and we'll be back on these live streams, which I hope you find useful and enjoyable. So see you soon. Have a great weekend, and bye.